Creating a budget is a foundational step in managing your personal finances effectively. It's the roadmap that helps you understand where your money is going, how you can save more, and how to make informed financial decisions. A well-constructed budget not only keeps you on track, but also empowers you to achieve your financial goals. Here's a step-by-step guide to creating a budget that works for you. Understanding your income. The first step in creating a budget is to have a clear understanding of your total income. This includes all sources of income, such as your salary, freelance earnings, side hustles, bonuses, and any other regular income streams. Be sure to account for your net income, which is the amount you take home after taxes and other deductions. Understanding your true income is crucial because it forms the basis for all your budgeting decisions. Tracking your expenses. Once you know your income, the next step is to track your expenses. This involves listing all your monthly expenditures, both fixed and variable. Fixed expenses are those that remain constant each month, such as rent or mortgage payments, utility bills, and loan repayments. Variable expenses fluctuate and may include groceries, transportation, entertainment, dining out, and shopping. To track your expenses effectively, you can use a budgeting app, a spreadsheet, or simply pen and paper. The goal is to have a detailed list of where your money is going. It's important to be honest and thorough in this step. Every little expense counts. Categorizing your expenses. After tracking your expenses, categorize them into needs, wants, and savings. Needs, these are essential expenses that you cannot avoid, such as housing, food, utilities, transportation, insurance, and minimum debt payments. Wants. These are non-essential expenses that you enjoy, but could live without if necessary, such as dining out, entertainment, and luxury purchases. Savings. This category includes contributions to your savings accounts, retirement funds, emergency funds, and any investments. Categorizing your expenses helps you prioritize your spending and identify areas where you can cut back if needed. Setting financial goals. A budget is not just about tracking expenses. It's also a powerful tool for achieving your financial goals. Whether you want to pay off debt, save for a down payment on a house, build an emergency fund, or invest for retirement, your budget should align with these goals. Start by setting specific, measurable, achievable, relevant, and time-bound SMART financial goals. For example, instead of saying, "I want to save more," you might say, "I want to save $5,000 for an emergency fund within the next 12 months." Once your goals are clear, allocate a portion of your income toward each goal every month. Creating the budget. Now that you have a clear picture of your income, expenses, and financial goals, it's time to create the actual budget. Start by subtracting your total expenses from your total income. Ideally, you should have a surplus, which you can direct towards savings or paying off debt. If your expenses exceed your income, you'll need to adjust your spending. Here's a simple approach to budgeting. 50-30-20 rule. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. This rule of thumb provides a balanced way to manage your money while still enjoying life and saving for the future. Zero-based budgeting. With this method, every dollar of your income is assigned a job, whether it's paying bills, saving, or spending on entertainment. By the end of the month, your income minus expenses should equal zero. This method ensures that you account for every dollar and avoid overspending. Envelope system. This method involves allocating cash to different spending categories, such as groceries, dining out, and entertainment. Once the cash in an envelope is gone, you can't spend any more in that category until the next month. This is a great method for controlling discretionary spending, monitoring, and adjusting your budget. Creating a budget is not a one-time activity. It requires regular monitoring and adjustments. Review your budget at the end of each month to compare your actual spending with your planned budget. If you overspent in some areas or underspent in others, make the necessary adjustments for the next month. Unexpected expenses and life changes can also impact your budget, so be flexible. Adjust your budget to reflect changes in income, expenses, or financial goals. The key is to stay committed to the process and make improvements as needed. Automating your finances. One way to ensure you stick to your budget is by automating your finances. Set up automatic transfers to your savings accounts, retirement funds, and bill payments. This reduces the temptation to spend money meant for savings or debt repayment. Automation also helps you stay consistent with your financial goals. Staying motivated. Budgeting can be challenging, especially when you're trying to cut back on spending. To stay motivated, remind yourself of your financial goals and the benefits of financial freedom. Celebrate small wins, like paying off a credit card or reaching a savings milestone. These achievements can keep you motivated to stick to your budget. Creating a budget that works for you is an essential step toward achieving financial stability and freedom. It helps you take control of your finances, make informed decisions, and work toward your financial goals with confidence. Remember, the key to successful budgeting is consistency, regular monitoring, and being flexible enough to adapt to changes. By following these steps, you'll be well on your way to financial success. Thank you for joining us on this journey. If you found this video inspiring and helpful, we invite you to like and subscribe to our channel for more authentic and uplifting content. Stay tuned for more videos that inspire, motivate, and bring positivity into your life. Remember, your support helps us continue to create meaningful content. Thank you, and we'll see you in the next video.